we've seen a banner couple of days here.
Oh wow, yeah,
man, it's been interesting. Even on the back of the Fed too. I guess you can't discount that. There were some they helped a little bit as well. Maybe, I don't know, but
we can go. You and I can go for hours on whether they helped or not in the ins and outs of the Fed. That's not for today. Let's try to stay away. Let's stay on topic here, because we're going to get to that Monday and what the potential opportunity was and how you do look at day trading stock index futures. And then we're also going to open up the platform, and I'm going to show you what I was looking at on an afternoon like Mondays. First of all, stock indexes measure the equity market by essentially averaging a bunch of stock prices. I mean, Jermal, do you want to take an example like the S&P 500 and just run people down what the 500 is, what the value of 4,400 kind of means, and what it's essentially, if it's up 1% or down 1%, what that is actually telling you as just like, because the value itself of like 4,400 is kind of arbitrary. It's just like a mishmash of a bunch of stocks. So what is the 500? What is the index value? And when it's up or down, what's that kind of telling us?
Well, like you said, I mean, there's 500 stocks in the S&P 500 index. They shuffle the index around every now and again. We had a big shuffle. I think it was last year. I'm trying to remember. Time's going by so quick, but you're right. The number, and that was something I was confused on for a long time. Is this number made up of like the average of all the price? No, it's not. It's just kind of this arbitrary number here. But it's important to pay attention to the idea of, like you said, Frank, when it's up or down 1 or 2, let's say up 1%. Typically, what you'll see, especially, let's take a day like today. It's up over 1% and change, I think. And so, in a day like this, you usually will see those names within that index usually moving more than the index. That's usually kind of how it works. So it gives you an idea of, okay, if the market is down 2%, this name that I have that's in the index might be down more than 2%. It might be on the order of 4% sometimes, right? So that's always something to pay attention to. That's how I watch the index. It gives me, and I think that's why a lot of traders do like the S&P 500, as we said on Tuesday. It's a good index that incorporates a lot of different sectors, a lot of different industries. So it's a real good measure of what's literally going on in financial markets most of the time.
Absolutely right. It's essentially, it is a benchmark, and it what does that benchmark do? It just really concisely tells you what broadly everything is doing. So like you could legit tune in for 10 seconds of financial content every day and get a handle on what the stock market is doing just by me saying the S&P 500's up 1%. That just right there just lets you know, oh, okay, there's not a lot of fear in the market. Most of the stock market is up. Like Jermal said, there's going to be a bunch of stocks that are up 2, 3, 4%, but there are also going to be some stocks that are down a couple percentage points. It's really just like an average of everything going on. I mean, very rarely, if ever, actually, I would, now I might be wrong on this, but I don't think I'm wrong. I would say there's probably never been a day where every single stock name has been up or down. There's always one or two.
You're saying in one direction. In the same direction.
Exactly. Like there's never a day where the thousands of public companies are all in one direction. But the S&P 500 and the Dow Jones and the small stocks, which has come up in the last year or so, they give you a good barometer of where everything is kind of moving. Like you would never see the S&P 500 up 1% and people jumping on Bloomberg News being like, there's a crash going on. Like it wouldn't happen like that, because you'd see this thing moving lower. Now, the futures, Jermal, they let you trade that index. We talked about this a little earlier in the week. You can't buy or sell the index. The futures, as you can see here, that red line on top of the white line, which is the index, stays right around the index there and lets you buy and sell that index. And it lets you do it for a fraction of its worth. Most equity futures right now demanding less than 10% of that full index's price in capital you have to lay out to buy or sell the thing.
Okay. Yeah. I mean, these are the type of things that people need to know. And this is, again, one of the reasons why I was always interested in getting to learn more about futures, because it was, the biggest fear was I'm putting up money that I might not necessarily have, and I'm worried about how much the index may or may not move, and eventually I might get taken out of my position. Oh yeah, and I didn't make any money. And so, now understanding how the margin works on it, understanding that it's very capital efficient, and being able to trade these type of indexes has really just set me at ease. Like, oh, okay.
Absolutely, absolutely. And so with that, and it's funny because I could do a deep dive. We actually did a great live stream yesterday on our Small Exchange YouTube channel, if you want to check it out, about getting comfortable with what a futures is and the definitions and all that stuff. So go check that out. But at the end of the day, you buy it or sell it. You buy it, you want it to go up. You sell it, you want it. Like if you bought S&P 500 futures at 4,000, you want it to go above 4,000. You could sell it back at 4,001 for a $1 profit. That's really nice. So we don't need to get in the ins and outs of that. I want to look into day trading using these low costs and why futures are so synonymous with day trading opportunity. And it's because that low cost, where you really get into trouble, Jermal, is when you use that low cost on a big product and to just like over lever your account. Like, it's like I have $10,000 and I'm going to put all that $10,000 into equity futures, buying them. And now I have $200,000 worth of equities in my $10,000 account. The market moves down a couple percentage points and the whole thing gets cleared out. We don't like to do that. We like to be nimble. We have small futures, first of all, so that you don't get too big. And also the idea behind futures most of the time, with stock index futures in particular on a day like Monday, is like they move down a few percent and you want to buy it and flip it in the next couple of minutes. And you saw this opportunity on Monday afternoon. The rally coming into the close was really nice, where they hammer stocks in the morning. They hammer them in the early afternoon and they're down, between 2, 3, 4%, depending on where you're looking. And they bounce back. Small stocks futures, you could have bought down there at 74.5 or just below 75, and then sold them back by the time the market closed for $100 profit. And that would have given you a return in that day of 10% relative to the money you had to put up. I mean, this is what day trading is about, right?
Most definitely. This is exactly what most people are trying to do. And these are, these last couple of years, particularly when people came into Monday, I know there was obviously a lot of angst and a lot of nervousness, but these are the opportunities that we're looking for, honestly. Yeah. I think most people have been looking for this idea of a pullback. You and I talked about this. It's not a situation where you have to go full in on these type of pullbacks. If you have, using your perfect example, if you have $1,000, then, maybe you do a quarter of that, right? Just to see where we are, because you look at this market over the last couple of years, there really hasn't been many downticks. And over those, until going into Monday, or I should say coming out of Monday, we basically had a 5%, move to the downside over a couple of day period. Those are situations where you want to take an opportunity to try and get in. And like you said, futures give you this opportunity, this ability to take a shot in these situations.
You're exactly right. Because I think a lot of the passive investor out there, or even like the slightly active trader, will be like, oh, well, I'm waiting to buy. I'm not going to buy until S&Ps are back down to 2,000. And it's like, yeah, that probably will happen. Like, I would say the odds are at even that happens in the next decade, that like they get at some point touch 2,000 because of some market crash, cyclicality, et cetera, but you're missing out on all these dips, and you don't need to go full boat, especially now that you have small futures like you do at your disposal. You see a 5% down move, get in there and look for $100. I know it feels weird buying that stock market, but we talk about this all the time, and buy the dippers talk about this all the time. The stock market tends to bounce. Now, of course, there's going to be those times where it moves lower and then the next day it moves lower, and you take your $100 loss and play the odds, which are in your favor, that it's going to bounce back. But yeah, you're totally right. No waiting for this. Like everyone wants to sit there and around the barbecue on the weekend and be like, oh, well, I'm waiting until we get this correction and then I'm going to get in. And it's like, okay, or you could take these small moves, trade them back and forth, and work your cost basis down to where that correction is before it even comes. And so that's really what it's about here. But it goes to both sides, Jermal. We're product indifferent, and we're not really coming in with a big directional bias. So let me pull up the platform and take a look. I got oil on the page here.
Platform time. Hey.
Yeah. Well, you look at this small stocks product. That was this is the same week of trading. Can you believe it? Off, like Jermal says, almost 5%, and then bounces back here. And now it bounces back. And when it's in this middle territory, there's not a lot to do for a day trader, right? Like when it's moving lower by a lot, I'm looking to buy it on a bounce. When it's in the middle here, it's like, I don't know what to tell you. It's in the middle of it's like having a short strangle on. The market is right between your strikes and you're looking to do something. There's nothing to do there. But now that it's ripping through these highs, it's up $2.25 here today. That's an outlier move. You can look at doing the same thing from the opposite perspective. Now, what would I do? I put in my order here at, where are we at? 78.88. I'll just get filled here for the sake of watching it. I will hit the bid to get filled on my short stock trade. Market's ripping to the upside. We just look to get on the other side of big moves in general. This is a big 3% rally. And now the idea is, okay, I'm short from around 78.90. Throughout the rest of the day, I just want this market to come back 50 cents, that's $50 in my pocket, or a full buck, that's $100 in my pocket. I'll put it in order to buy this thing at 77, not 11. That's going to be a long time. 77.90. That'll be my $100 profit. That's my order to buy it back. Now, Jermal, the only other side of this, and people use bracket orders and what have you to do this, is if this market today or tomorrow gets up to 79.90, or let's just call it $80, I'm out for my $100 loss, because I just know that this is an outlier move. This market moves about $1 a day. It's up over $2, outlier move. And I want to use those odds not only today, but next week, next month, next year. And so I can't let the losers get out of hand. And so it's really nice. I'm short here at 79. I'm looking to buy it back for a profit down here. And if it gets up to 80, I'm out for a loss. That's pretty simple enough day trading equity index futures, right?
Yeah, most definitely, man. I mean, we don't know what's to come, right? But you're being smart in putting these other orders out there, putting this situation so that you can protect yourself to the upside in case it does go awry, right? So yeah, that's smart trading.
Absolutely, man. Thanks so much. This has been Day Trading Stock Index Futures. Another fun one here with my buddy Jermal. We're going to have some more fun next week, my friend, on the leap and small stakes. And we're going to be talking small crypto, man. And yeah, if you weren't here for the start of the show, first crypto stock index coming to you October 4th. You can get more information at go.smallexchange.com/SCCX. That's the new small crypto product, man. We're super excited about it. First of many crypto products coming from the small exchange.
That's cool, man. SCCX. And for those who didn't, you got to look at the, it's on the Twitter page now, right? Where you see the little graphic probably. Oh, got to check that out.
There you go.
We built this city. We built this city. We built this city on crypto coins.
Beautiful. Couldn't have said it better myself, Jermal. Thanks as always for joining us here on the Tasty Trade Network. We got Splash into Futures coming up next, everybody. Markets are moving. We got some trades for you. Thanks for watching.